CNBC-TV18 and CNBC Awaaz present the REIT Connect in partnership with IRA.
Hello and welcome to REIT Connect, where we tell you how real estate investment trusts can become an important part of your diversified portfolio. Now, to discuss more about REITs, we have with us Mr. V. Jayashankar of Kotak Investment Banking and Ritwik Bhattacharjee of Embassy REIT. Gentlemen, so good to have you on CNBC TV18. My first question to you, Jayashankar, you have seen so many types of asset classes come to the equity market, come to the stock markets. What differentiates REIT as a product, and how does it connect with the Indian mindset of investing?
So REIT is the most efficient way of owning real estate, highly transparent, highly liquid, and it gives you total returns which kind of compares somewhat to that of an equity product, and its overall distribution is far, far superior to debt. So ultimately, investors find a need to own that as a separate asset class given its attractive returns.
Yes.
You look at the global context, there are about $2.5 trillion of REIT as an asset class. India is just about $10 billion 5 years after the first REIT listed. So we have a long way to go, and there's a huge opportunity going forward.
All right. So huge runway there, and especially looking at the kind of success that REITs have had globally. Now, Ritwik, in terms of the traction from the investor community, and you have a direct interface with several types of investors, what is it that attracts them to REIT, and how is the traction?
You know, that's a great question, because when we listed Embassy REIT in 2019, we really didn't know what to expect from the Indian market. As you rightly pointed out, REITs have been around for a long time in a global context, as Jay said as well. And since for 60 years, they've been sort of part and parcel of an investor psyche of the real estate diverse portfolio that exists worldwide, but just not in India. And the reason for that has been that, commercial real estate was very difficult for Indian investors or foreign investors in India to get their hands around, simply because the track record hasn't been very good. So taking that forward, after we listed, we predominantly started with foreign portfolio investors making up the majority of the register, simply because they knew what REITs were like globally, how they've performed. But as we continued to perform during the first 5 years that we listed, including some very difficult years during COVID, we saw mutual funds take up more of the register. We saw retail investors become more of the register, so much so that we've gone from 4,000 retail holders at IPO to close to 90,000 right now. And mutual funds were less than probably a percentage of our register at IPO, and now are 25%, close to 25% of the register. So clearly, there's an incredible amount of domestic acceptance. But as Jay pointed out, there's a lot more to do.
That's right. So, Jay, you have an interface with the investor community while you pitch for these IPOs. Now, when it comes to REIT, the traction has grown in both retail as well as from foreign investors and also domestic institutional investors. What are the key questions that domestic investors and institutions generally ask, and what attracts them most?
Yeah, that's a pretty interesting question, I would say. A lot of the mutual funds, for example, have raised hybrid funds,
Yes.
Balance funds, balance advantage funds, where they want to get the right balance between equity and debt, and it sits in beautifully over here. So you look at some of the largest mutual funds which have a huge corpus in these areas, and these guys own a fairly large proportion of Embassy, own a pretty large proportion in case of Brookfield, Mindspace, as well as the Nexus Retail REIT. So there's a huge appetite, therefore, for mutual funds to own not just in the large cap, mid cap, or small cap, but also in balanced funds, which give you a very attractive return, which call it is in the mid-teens. When it comes to the foreign institutional investors, all of them are looking at 10% plus dollar return. So they are looking at it as equity product, not as a debt product. Unlike in India, where you're looking at it as equity-like, a balanced fund, a hybrid investment strategy from a mutual fund or insurance company point of view. And I think over a period of time, even in India, you probably may have the same characteristics, and all these definitions may perhaps melt away, because today it's only about 10 billion. Who knows? 5 years from today, it could be $20-25 billion, few more REITs getting listed, or few more acquisitions being done by the existing players.
Right, a few more acquisitions. So, this particular space is action packed in terms of the propensity and the growth opportunities. Now, Ritwik, it is a dream of every Indian to have enough in gold invested. Along with the stocks and other asset classes, and also to own a property. Now, this particular asset class gives a very small ticket size in which you can own a part of a commercial property. At the moment, it hasn't really expanded to residential in India, maybe at some point later. But this particular bit, how is the attraction when it comes to the property investment and offsetting other types of property investment and coming towards REIT and the tax benefits? What all really works with Indian mindset?
Great question. I think fundamentally what this has done for the Indian investor who's looked at real estate is it's really moved people away from what the fragmentation of fractional ownership was. Physical property ownership, particularly around an office, in my mind, has just been very, very difficult to manage. Right? Whether or not you sit on the receiving end of maybe not having enough disclosure, it's not transparent. And I think what a REIT did was give you the option to invest much like you just do with a share of a company. And that's what it is. You think you just invest on the stock exchange with one unit. You think about what we do at Embassy REIT. For over 20 quarters, we have given the kind of disclosure that we've been commended on globally, where you can see exactly what's happening with the assets, what we're doing with all the fundraisers and the development that we're doing. We pay out distributions every quarter. And REITs actually in this country are only supposed to pay out distributions semi-annually, but we've taken the governance bar so high because we take our role as part of the fiduciary system so seriously. We've been doing it every quarter, and we have no plans to actually change that. And that, I think, has really been a big boost to the investor psyche to sit here and come to the market and continue to witness the 90,000 that we have, the 200,000 shareholders. And I think that sort of, institutionalization of the product within sort of the entire real estate spectrum has really given people a lot of confidence. Now, that unfortunately is not something that has really applied to the residential sector. I know that people are buying houses and people continue to do that, but there is clearly a level of, I think, governance that the REITs provide that give a lot of investors comfort, that give our regulators comfort to say that you're abiding by the law, you are putting a lot together to make sure minority investors are protected and they have an actual say in the companies that you run. So I think that whether or not you can buy gold, you can buy a stock, you can buy residential, but something like commercial real estate through a REIT portfolio should absolutely be part of any broad asset allocation and diversification strategy.
Ritwik has touched one important aspect about corporate governance. I would say REITs probably have the highest level of corporate governance, given that the level of disclosure you find in a REIT is very high. When you do an acquisition, you have to go to investors and justify it's an acquisitive acquisition, and you get full details, including about future projections. So it gives a great degree of comfort for investors to come and invest in a REIT.
That's right. You touched upon corporate governance, and in property related matters, to have a high standard of corporate governance is one of the game changers if we talk about India. But Jayashankar, you have sold REIT as an IPO as well. You sold real estate companies as IPO as well. What could be the difference of retail investors' approach in the two?
See, residential play is very different. Commercial real estate are high rental income generating asset. A residential property will not get you more than, call it 3.5%. I don't know what those yields are. Those kind of yields are never high income generating. So residential properties will not be so much amenable to a REIT as much as a mall, as much as commercial real estate or maybe warehouses. So these are three asset classes which will come under REIT. When it comes to residential, it will always be a company listing, like you have Lodha that's listed, you have Oberoi that's listed, you have DLF that's listed across both resi and commercial. But anyone who's a residential player will prefer to list his company directly in the stock market. And the important thing to note about resi is India is a high growth market, and there are very few residential real estate companies that grow at as fast a clip as the Indian companies have shown in cities of Delhi, Bombay, Bangalore, and so on. So you will have residential players continue to list, raise QIP as we did for Lodha, as well as we have done for Embassy in the past, to really fund your growth story.
All right. So these are two very different asset classes. Let's talk about REIT as an investment in terms of the future of growth when it comes to the India's office space. Now, we've seen many global players come, set up very swanky offices in the last 10 years. We have seen a very different kind of office space. It's experience-based as well, utility-based, as well as it has to have a certain standard, which we had not seen in the past. Now, with COVID, there is a bounce back that the industry has seen. Ritwik, how do you see, where are we in the stage of growth and bounce back after COVID? And how do you see the growth potential going forward in the next 5 to 10 years?
We are in the early stages of this growth cycle in India. I think if you think about the fact that COVID was a little bit of an existential crisis for commercial real estate, but I would say that it was actually out west where there was far more of an issue with people coming back to the office and people working from home. In India, while there was obviously some dislocation in the market, I think Indians tend it's just not the kind of market where you find that it's conducive to working from home. And I think for a number of different reasons. One, the physical infrastructure at home doesn't lend itself to many things. One, culture, collaboration, cybersecurity. Number two, workspaces that we provide, the kind of the office parks, the total business ecosystems that we have where there's, food courts, amenities, people, that lends itself to people just being more productive.
Yes.
Where you think about, we have, 15 million square feet parks that rival, Canary Wharf, entire CBDs out west. These are the kinds of parks that, attract global captive centers that we're seeing right now, which is why you've seen this entire explosion in leasing. We were very fortunate to be a part of, having leased sort of 8 million square feet this last year. But that just tells us that there's so much more opportunity. This is an 800 million square feet office market in India that's only going to continue to grow.
Yes.
Because there's the abundance of talent. Companies are setting up shop. You can, obviously see the resilience in India's as a preferred destination right now for
Yes.
global investment. And
Yes.
as that grows, office spaces are just going to be more and more in demand, and people are going to and senior management worldwide are looking to have people come back to the office. We're a young demographic. We're a demographic that needs to come into the office, be productive, and make sure that you're contributing. It's no longer sort of just an offshore or an outsourcing sort of business. You are contributing to the global technology stack, the business stack for multinational companies, across the planet.
But, Jayashankar, when we look at the office space and the way the global companies are looking at India, how do you see this particular space growing in the future? And we're not just talking about office spaces. We have malls also in REIT, and probably it will expand to other areas like logistics, warehouse, even data centers.
Yeah, that's a very interesting question that you posed. As I mentioned at the beginning, the REIT asset class is $2.5 trillion globally.
Yes.
India is the fastest growing economy. Obviously, you need high-class offices across multiple cities in India. While $10 billion is listed, probably what is not listed is perhaps much higher than even this $10 billion, right, across both malls as well as commercial. And you're going to find similar quantum being invested over the next 3 to 5 years. So I think this entire portfolio that's today existing will probably double in 3 to 5 years' time.
Right.
And that would mean more and more investment. As far as supply of money is concerned, I think there are enough foreign and domestic investors willing to invest as long as high quality paper is available. I don't think there's any dearth. We saw that when we did the Embassy last sell down of Blackstone, roughly 23%, $850 million. And we had a book which was probably in excess of 2x. There's enough money available, and there's only institutional money. We are not even touched in that particular transaction with respect to non-institutions.
You mentioned,
huge...
Yes, you mentioned a very important point, because on the exchanges, if a REIT block is sold and an investor can exit, that gives a lot of confidence to this particular asset class in terms of liquidity as well as traction, right?
True, absolutely. And $850 million, I think last year, perhaps it ranked among the 2 largest blocks from India. and perhaps the largest block in real estate globally anywhere. So it tells you how much India's come forward in terms of the depth of the capital markets.
That's right. So, Ritwik, talking about the other asset classes versus REIT, how would you pitch for a REIT being an important asset class for a diversified portfolio?
Well, I just think about myself, right? As an investor, because apart from being, privileged to work in an organization like a REIT and having listed it, I always think about, what does my portfolio look like for the long term? And I think there's always, room for effectively, a balanced mix of equities, of fixed income, of gold or currencies, commodities, and real estate.
Yes.
So I think about real estate in this form as being effectively more akin to equities, because you can just buy it and hold it and keep it. And I think for the long term, I think about the fact that if you think about real estate as part of a portfolio, typically it tends to be between 5 and 15%, really depending on your appetite for where that sits, whether you hold it in a private vehicle, whether you can have it publicly as a REIT, in the form of a REIT. But in my view, it is the perfect instrument for anyone, and I mean, whether for all your listeners, for you, for everybody even sitting in this audience, to really think about having a product that will pay off in the long run. Whether you're an like I've said, if you're a retiree and looking for income, if you're just starting out on your investment journey, you think about the fact that you own a piece of property in India's growth markets, in Bangalore, in Mumbai. So it should always be a part of sort of a portfolio, and it's not something that I'm not a speculator. I believe in investing for the long term. So and I think about, if I had to educate my own children about buying real estate, you should buy it in the form of something that's safe, that you can actually look at, that is prudently managed, that doesn't have much leverage on it, and over time will give you the sort of returns that you expect from, whether it's sort of in the mid-teens or whatever that portfolio is. Buy good companies. Good companies tend, and in good structures, tend to take care of themselves.
Right. And Jayashankar, for the Indian mindset, in terms of dividend cash coming in after every few months, is that something that works well with a certain set of investors?
Absolutely. You're talking about yields annually in the ballpark of, call it, between 6 to 7%, depending upon which REIT we are talking about, and a total return in mid-teens, right? So you're getting an assured return year after year, and a total return as the unit appreciates. So it's a far more predictable, I would say, investment as compared to others. So which is why I would agree with Ritwik. A 5% of overall portfolio, $1.8 trillion of money invested in India, you're talking about a potential 90 billion. We are probably scratching the surface. So next, give it 3 years, 5 years, 10 years, it'll be a huge, huge asset class.
All right. Next 3 to 5 years, it has a huge potential for growth. Any final words from you, Ritwik, on this before we close this?
No, I think I'll just say that it's been 5 years since Embassy REIT listed, and in that time we've seen, the market grow to the 10 billion that Jay has been talking about, and there are 4 REITs. I think if you think about the next 5 years, now that we've got a fair sense of how the structure works, really the sky's the limit for actually having more people buy the product, making the product evolve, the capital markets grow. The one thing that I think we haven't touched on, but is a very critical point of real estate in this country, is leverage, is the ability to not be burdened by debt.
Yes.
And REITs have very stringent rules to make sure that we're prudently governed. We can only take up to 49% in debt. So you never see those kinds of, we're very good credit.
Yes.
So these are the things that, really the government's been very pragmatic and very helpful in making sure that we have the rules that allow us to grow, that allow us to still sort of give the distributions and be well governed and have the kinds of disclosure. So if you have all those building blocks in place, I think the next 5 years and beyond, you'll definitely see a lot more growth in the sector. And it's been a privilege for us to be a part of this entire exercise, to play such a transformative role in India's capital markets. I mean, 5 years ago, if you'd said, we're going to put a REIT in this country, but then, then you sit back and say that after that, we've grown to the size and the scale where which real estate company has distributed close to 10,000 crores in 5 years, even in the midst of a COVID cycle. I think you would have looked at me like I was crazy at that point. But I think to have the privilege to sit here and say that we've been part of building something that's so transformational and really over the next 5 to 10 years will completely sort of set the stage for it to mirror what's happening in India's economy, I think that's a very gratifying thing for us.
All right, very interesting points made there, both Ritwik as well as Jayashankar. Thanks so much for joining us on this segment and making us all understand more about real estate investment trusts as an asset class. With that, it's a wrap on REIT Connect. Thanks so much for tuning in.
CNBC-TV18 and CNBC Awaaz present the REIT Connect in partnership with IRA.